Have you ever wondered how to build your credit score? Well, let's start by understanding its importance. A good credit score is more than just a number. It's a passport to financial opportunities and stability. It's like your financial report card, and trust me, you want to score well. Why? Because a high score can open doors that a low one can't. It can be the difference between securing that dream house or settling for less. It can impact the interest rates on loans or credit cards you apply for, meaning a good score could save you thousands of dollars in the long run. Even job prospects can be influenced by your credit score. Some employers check credit histories as part of the hiring process, especially for positions that require financial responsibility. So it's clear that a good credit score is crucial, and understanding how to build it is the first step towards financial stability. So, what exactly is a credit score and how is it calculated? Consider your credit score as a financial report card. It's a 3-digit number that lenders use to assess how likely you are to repay your debts. The higher the score, the more financially trustworthy you appear. This score is calculated based on 5 key components. First is your payment history, which looks at whether you've paid your past credit accounts on time. This is the most significant factor. Second is the amounts you owe, or your credit utilization. Lenders prefer it when you use a small percentage of your available credit. Next is the length of your credit history. A longer credit history can increase your score. Fourth is your credit mix, the different types of credit you have. And finally, new credit. Opening several credit accounts in a short period can lower your score. Now that you know what a credit score is and what factors affect it, let's move on to how you can start building it. Starting from zero? No worries, everyone starts somewhere. Now let's talk about building that credit score from scratch. First, let's consider a secured credit card. This is a type of credit card that requires a cash deposit, which then serves as your credit limit. It's a fantastic way to begin your credit journey because it's relatively low risk for lenders, making it easier for you to get approved. Plus, your activity on this card will be reported to all 3 major credit bureaus, helping you build that all-important credit history. Now maybe you're thinking, but I don't have the money for a deposit. Don't fret. There's another option for you, becoming an authorized user on someone else's credit card. This could be a parent, a partner, or a trusted friend. As an authorized user, you'll benefit from their credit activities. However, this is a responsibility to not be taken lightly. Remember, their credit habits will reflect on your credit history, so make sure they are financially responsible. A third option is getting a credit builder loan. A credit builder loan is a unique type of loan where the money you borrow is held by the lender in a savings account while you make payments. As you make timely payments, these are reported to the credit bureaus, helping you establish a positive payment history. Once the loan is paid off, you'll receive the money in the savings account. It's a win-win situation. Regardless of the method you choose, the most crucial part of building credit is making timely payments. Your payment history makes up a significant portion of your credit score, so it's essential to pay your bills on time, every time. And don't forget, it's not about how quickly you can build your credit, but how consistently you build it. You're not just sprinting for a short-term goal, you're running a marathon for long-term financial health. Remember, building credit is a marathon, not a sprint, but with consistent effort, you'll see your score start to rise. And that's the beauty of it. With time, patience, and discipline, you'll see those 3 digits rise and open doors to a world of financial opportunities. Already have a credit history but want to improve your score? Here's how. Let's start with the basics. One of the best ways to boost your credit score is by consistently paying your bills on time. This may seem like a no-brainer, but it's surprising how many people overlook this simple step. Late payments can have a detrimental effect on your credit score, as payment history is a significant factor in credit score calculations. Next up, try to reduce the amount of debt you owe. This can be a tough task, especially if you're juggling multiple loans or credit cards. But here's the catch. The amount you owe is also a major factor in determining your credit score. So, the less you owe, the better your score. Start by creating a budget and tracking your spending. Identify areas where you can cut back and use that extra money to pay down your debts. Now, let's talk about credit accounts. You might think that opening a bunch of new credit accounts would improve your credit score. After all, more credit means more opportunities to demonstrate responsible borrowing, right? Well, not exactly. Applying for multiple credit accounts in a short period of time can actually lower your credit score, as it may signal to lenders that you are a high-risk borrower. Instead, try to maintain a few long-standing accounts and manage them responsibly. While we're on the subject of accounts, Don't close unused credit cards as a short-term strategy to raise your score. Owing the same amount but having fewer open accounts may increase your credit utilization ratio, which could negatively affect your score. Lastly, don't expect overnight results. Improving your credit score is a marathon, not a sprint. It requires consistent effort and responsible financial habits. But the payoff is worth it. A higher credit score can open doors to better loan terms, lower interest rates, and more financial opportunities. By following these strategies, you can steadily improve your credit score over time. You've worked hard to build a good credit score. Now let's keep it that way. Maintaining a good credit score is just as important as building one. It's your financial reputation, and keeping it shining is crucial. So, how do we do this? Firstly, always make your payments on time. This accounts for a significant portion of your credit score, so don't underestimate the power of punctuality. Secondly, keep your credit card balances low. High balances can hint at credit risk, and that's not a message you want to send. Next, apply for new credit only when necessary. It's a common misconception that more credit cards mean a better credit score. In reality, opening new accounts too frequently can actually lower your score. Remember, your credit health is a marathon, not a sprint. Consistency is key here. Building and maintaining a good credit score is an ongoing process, but with these tips, you're well on your way to achieving financial stability.